Welcome to From Employee to Billionaire. Here we explore fascinating rankings of the top 10 in various domains of wealth and luxury. From billionaires to the most expensive cars, extravagant homes, gadgets, and lifestyles, our content is designed to inspire and entertain you. Subscribe now to discover amazing facts, captivating stories, and incredible rankings. Don't forget to turn on the notification bell so you never miss our upcoming videos. Thank you for being part of our community. Get ready to dive into the world of From Employee to Billionaire. In the ever-evolving tapestry of wealth and innovation, the year 2025 unveils its titans. These are the individuals who have not only amassed fortunes, but have also sculpted the contours of our modern world. The 17 economic indicators you can't ignore. Did you know that some of the biggest financial crises in history could have been predicted by a few key numbers? That's right. Understanding economic indicators isn't just for economists. It can change how you manage your money and investments. Stay tuned to uncover the secrets behind these game-changing signals. Hi everyone. Today we're diving into a topic that can transform the way you approach your finances. Economic indicators. These are the signs that guide us through the maze of financial markets, and nobody explains them better than Robert Kiyosaki. Whether you're an investor or just someone looking to secure your future, understanding these indicators is critical. The financial world is more complex than ever. With market volatility, inflation concerns, and unpredictable economic shifts, how do you make the right financial decisions? The truth is, most people overlook the signals that can guide them. Economic indicators, like interest rates, unemployment data, and stock market trends, hold the key to navigating this uncertainty. By recognizing and understanding these indicators, you can make smarter investment choices and safeguard your financial future. Robert Kiyosaki highlights 17 economic indicators that every savvy investor should know. Let's explore each one in more detail. 1. GDP growth rate. This measures the overall health and growth of an economy. 1. A high GDP growth rate suggests economic prosperity, while a declining rate may signal a recession. 1. Pay attention to quarterly GDP reports for trends. 2. Inflation rate. Inflation affects everything from the price of groceries to investment returns. 2. High inflation erodes purchasing power, while low inflation may indicate weak demand. 2. Tools like the Consumer Price Index, CPI, help track inflation trends. 3. Unemployment rate. A rising unemployment rate can signal economic instability. 3. However, moderate levels of unemployment are normal and necessary for a dynamic economy. 4. Consumer Confidence Index. This reflects public optimism or pessimism about the economy. 4. High confidence often leads to increased spending, which boosts economic growth. 5. Interest rates. Set by central banks like the Federal Reserve, interest rates influence borrowing, spending, and investing. 5. Rising rates typically slow economic activity, while lower rates stimulate growth. 6. Housing market trends. The real estate market is a strong indicator of economic health. 6. Rising home prices and construction activity often point to a growing economy. 7. Stock market performance. While the stock market isn't always a perfect predictor, it's a leading indicator of investor sentiment and economic expectations. 8. Bond yields. Yields on government bonds, especially the 10-year Treasury note, can signal future economic trends. 8. A rising yield often means investors expect stronger growth. 9. Corporate earnings. These indicate the profitability of companies. 9. Strong earnings suggest a healthy business environment. 10. Retail sales. This tracks consumer spending, a major driver of economic activity. 10. Seasonal trends like holiday sales can provide insights into consumer behavior. 11. Manufacturing data. Reports like the Purchasing Managers Index, PMI, show the level of industrial activity. 11. Growth in manufacturing often precedes broader economic expansion. 12. Trade balance. A country's exports versus imports can indicate economic competitiveness. 12. A trade surplus is generally seen as positive, while a deficit may raise concerns. 13. Currency strength. A strong currency can make imports cheaper but may hurt exports. 13. Monitoring exchange rates helps assess global competitiveness. 14. Federal Reserve policies. The Fed's actions on monetary policy, like adjusting interest rates or quantitative easing, have widespread impacts on markets. 15. Commodity prices. Prices for oil, gold, and other commodities can signal inflationary pressures or economic shifts. 15. For example, rising oil prices often lead to higher transportation and production costs. 16. Savings rate. This reflects how much of their income consumers are saving. 16. A high savings rate may indicate caution or economic uncertainty. 17. Government debt levels. High levels of public debt can constrain a government's ability to stimulate the economy during downturns. 17. Keep an eye on debt to GDP ratios. Understanding these indicators can give you the power to anticipate market trends and make informed decisions. Now let's focus on two of the most crucial indicators, the inflation rate and interest rates. An inflation rate. Inflation can erode the value of your savings and investments over time. For instance, during the 1970s stagflation period, double-digit inflation rates devastated purchasing power. Smart investors shifted their money into assets like gold and real estate to hedge against inflation. Interest rates. These are the backbone of borrowing and lending. When the Federal Reserve raised interest rates significantly in the early 1980s to combat inflation, it led to a severe recession, but ultimately stabilized the economy. Today, understanding interest rate trends helps you plan for everything from mortgages to stock investments. So there you have it, the 17 economic indicators that can guide your financial decisions and secure your investments. From inflation to interest rates, recognizing these signals gives you a massive advantage in the financial world. What do you think? Which economic indicators do you find the most useful? Let me know in the comments. And if you want more insights into mastering your personal finances and investments, make sure to check out my other videos. Don't forget to like, share, and subscribe.